Okay, this is the last recording for the lesson 8 homework assignment that has to do with master budgeting. So we have the cash disbursements budget left to do and the cash budget, which is a combination of both the receipts and the disbursements budget. So we'll do both of these last two budgets in one video. So for the disbursements, here's your assumptions. We're going to attempt to maintain 30 days in payables. So we're going to try to abide by the terms and conditions that we have for making our payables on time, right? So generally you get 30 days to pay your bills, especially if you have credit terms. So we'll estimate about a month of payables on due at any point in time. And then I also want you to assume that one payroll, so 1 out of 24 payrolls for the year, so they have payroll twice a month, has been earned but not paid. Okay, so that means, essentially what that means, get rid of that equal sign. What that means is that employees worked at the end of the year and the payroll happens in the next year, 2021. And that generally will happen every year. So you'll have one payroll that's in process that hasn't yet been paid. And we had the same issue in 2019 because you'll see on this balance sheet right here that there was an amount that was due payable, right? So one payroll. Okay. Let's also assume we have no planned purchases of property, plant, and equipment for the year. Let's assume rental expense is the same amount as in 2019. And finally, let's assume income tax paid is paid in quarterly payments. So at the end of the year, we owe for a quarter at that time. So the end of December quarter will be due and payable in the first quarter of 2021. And the same thing happened last year. You'll notice you had a tax payable amount, right, which was roughly a quarter of what was due. All right, so we're going to have those considerations. I'll come back to the cash budget when we get to it. All right, the first two are pretty tricky to do because you've got the payable to deal with. So if you remember, so what we're dealing with here is all the cash that's been paid, and we're first focusing on buying those raw beans. So if you go back to your tab here, here's the amount, let me scroll up, right here, required purchases of beans. This is what we're planning on purchasing this year. But we're not going to pay all of that. We're going to pay 11 out of 12 months of that because 1 month is due at the end of every month. Right, so we get 30 days to pay. So we're going to pay 11 out of 12 of those months for this year. So we'll average that out. And then again, like I said earlier, we have this amount too that's in accounts payable that's going to get paid in 2020. So that's what we're going to start with. So equals, let's start with what we owed at the end of last year right there. And then let's go to that sales and cost of goods sold budget, grab what we purchased and multiply that times 11 divided by 12. So like I said, 1 month of that is not going to get paid until 2021. So you don't want to pick that up. Okay, that's the exact right amount there. Now this one's tricky too, and I set it up, the formula that's there is, I think, the easiest way to do it. There is a couple ways you could do this one. But essentially what we're doing here again is we're looking at, okay, what's the wage that I'm paying? And remember, you got one payroll that at the end of the year is not paid yet. It won't get paid until the next year, 2021. So you got to deal with that too. So let's take a peek over here on the sales and cost of goods sold budget form. You've got direct labor costs right there. So that's for roasting. That's the roasting operation, direct labor cost only. And down here you got the kitchen. There's the direct labor for the bakery, right? And then you also have over here on the SG&A, the total SG&A wages. So you want to go for the total tab. That's the third panel down, right? So this was roasting SG&A, cafe, and then the total of both, right? Total of both. So that's part of your wages, and these two other pieces over here are part of your wages. So remember, with roasting, you got the manufacturing wages you pulled up to cost of goods sold. That's what this is. And with the bakery, you have wages that got pulled up as well. So the way I'm going to have you do it is we'll grab some of the pieces now, and then we'll grab the SG&A pieces the actual costs of those pieces in a moment. So we'll take it in a couple steps. Let's give it a shot. So first, let's go get the wages that are due from last year, because that's going to get paid in 2020 right there. And then let's pick up our direct labor right here for the roasting business. And then what I want you to do is subtract out 1 month, or one payroll, I should say, one payroll that we haven't paid yet at the end, and that's going to be based on all the various payrolls. So that includes this one, and it includes this thing down here for the bakery, and it includes all those SG&As right there, that times 1 divided by 24. All right, so remember it's 24 different payrolls. One of them is outstanding at the end of the year. We have not paid it. So you got to back that off. Okay, that is correct. That is correct. Okay, then this one's easy. We just go to the sales and cost of goods sold for roasting. So I'm going to keep in mind we're still in roasting. Go to roasting and grab your manufacturing overhead right there. Okay, and then, okay. So remember when we did the very first assignment where I had you go through the SG&A expenses, you put some of the depreciation up underneath the roasting and up underneath the bakery as manufacturing overhead. It's in here. Some of the depreciation is in here. But depreciation is a non-cash item, so you got to back it out. You got to back out the depreciation that's in the MOH. Okay, so we're going to go over to the depreciation schedule and grab that. So before you go, put a minus right there, then click on this, and then right down here, right there. All right, so that's the manufacturing depreciation for 2020, okay, for 2020, based on the roasting business. So you're backing that out because it's in here, it's part of MOH. You're backing out depreciation that's included in MOH, right? Because it's a non-cash item and you're doing cash disbursements. So you can't include it as a payment if it's not paid. All right, now here's where I'm going to grab all the bakery costs. So go back over here, grab all the bakery costs, which are right there. Cost of goods sold that I got to pay off, right? Bakery costs. Remember I said earlier, that's where I'm going to pull in this direct labor, because those three pieces together add up to this piece. So that's that. And then the coffee, okay, that's right underneath that, right there. Coffee, cost of goods sold. And the other cost of goods sold. That's for the cafe. So that's cafe cost of goods sold. You got same problem here. You got depreciation that's embedded in here. So let me put that in here. MOH depreciation included. Okay, so it's right there. We got to go get it and back it out. So equals minus depreciation schedule D113. Okay, so that's the baking depreciation for 2020 on the kitchen that is included in here. And of course, it's not a cash payment, so you got to back it out. So this backs it out. Okay. Oh, this, I made this mistake before. 44 should be actually 56. Okay, so right there, make sure you're grabbing the correct reference, 56. Let me explain, we'll go over there. What I grabbed was this amount right here, which is the cost of goods sold. And because we're dealing with cash payments, we want the purchases, required purchases, because this is what we're going to be buying. So we got to pay for what we're paying. So fix that, make sure that. Okay, so that should be H56 right there. All right, that's perfect. Just double checking my totals. That's it. All right, these are really easy. We're going to go to the SG&A budget and grab the grand totals for each one of these items. Okay, we don't have to worry about any accruals here, right? Because these the accruals were all figured in up here. And that was part of what changed this number too, is the accrual on the inventory that we're gonna buy that's included in the cash payment. All right, notice that when I did SG&A, I stopped at office expense. So let me go back. I stopped at office expense. I did not pick up depreciation. Okay, I did not pick up depreciation. So make sure that's where you stop there. You won't make the mistake because I didn't include it, but you might not think about it. So again, the reason why you don't want depreciation in there is it's not a cash item. All right, we said that PP&E was 0. The additional investments, we did make some more investments, so let's go get that cash payment. Under investments, it's right there. So this is a new investment that we're making. Okay, we said this would be the same as last year, so let's just reference that, that's fine. Okay, now we got the mortgage, principal, and interest, which is over here. Let's go take a look at that. So we've talked about this before, but I want to review it. This is the principal one. Let's look at it. So if you look at what I've got in this cell, I've grabbed the last one from 2019 and I grabbed the first 11 for the year 2020 because the last payment in every year is made in the next year in terms of the cash flow. So that's why I'm picking up this one. This one got paid in 2020, even though it was expensed in 2019. These got paid in 2020. This one will get paid in 2021. So that's why it's on a lag. And then this one's the interest. It's the same way, of course, because these are the payments and the interest goes with the principal. So again, this one at the end of 2019 got paid in 2020 in terms of cash flow. All of these got paid in 2020, but this one's going to get paid in 2021. So when we get to the balance sheet, you're going to see that gets picked up and that gets picked up on the balance sheet as payables. But we're interested in the cash flow, so we're going to grab these two pieces. Let's go ahead and do it. So grab the principal. That's this one. And grab the interest. That's this one. Okay. Now the income tax expense is a little tricky. You got to go back and get what you owe from before. That's right there. There's your income tax. And then you have to add to that. Let me go back to the sheet. And you can get rid of that cash disbursements. That happens whenever you come back to the sheet, but we don't need to do that. We're going to type in the amount of the tax that was given in the assumptions times 0.75, meaning that 3/4 or 75% of the taxes that are due are going to get paid this year. And we'll pay what was due at the end of last year. And then when we get to the balance sheet creation, we'll have the other 25% of this that's accrued moving forward. So that gets paid. The other 25% of this gets paid in 2021. All right, that is your cash budget right there. Let me just double check my numbers, make sure everything looks good. 22. All right, everything looks good. All right, so if we go over here to the cash budget, this is just a cell reference over to the cash receipts budget. Go grab the total. Good, right there. And then this one is from the cash disbursements. Just go back to the cash disbursements and grab the total. All right, and then this is the receipts minus the disbursements. So this is the change in cash. Okay, now this cell is equal to this cell for 2019. That's what I was talking about. Let me go back and show you. In the directions, the beginning cash balance in 2020 is the same as the ending cash balance in 2019, right? So if you end the year 2019 with this amount, you start 2020 with that amount in your account. Okay, so then you just add the change in cash, which was an increase in cash, to the balance you had to start with. So that's what you have in your cash account at the end. Now there's one other little thing I need you to do for me before we finish off this assignment, and that's to put $22 in there as a rounding error. So I meant to give that to you when I did this particular recording. So I'll just slide that in there right now. And then don't forget to save your file right here on this one. Scroll up to the top so you can see the top of it. In fact, it's always nice if you bring all of your sheets so they're at the top corner. So when I open them, everything looks great. So if you save it right there, make sure you use the notation that I've given you here for saving it, last name, first name, lesson 8, and then upload that file by the due date. All right, let me know if you have any questions.